Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make you a little bit of money. My job is not just to entertain, but to educate. I got to put this stuff in context. Call me 1-800-743-CNBC. Tweet me at Jim Cramer. Bubble? What bubble? Today we saw what can happen when the real economy surfaces. We got some tremendous numbers from actual businesses. And I think we need to celebrate that so many companies not connected to the data center or artificial intelligence can be doing this well. And they're the reason why the Dow rallied 218 points. S&P was basically flat, and the Nasdaq, home of so much AI, dipped 0.16%. Why is this industrial strength so important? Because right now there's a perception that we only have two kinds of companies. There's the companies that are connected to the great data center build-out, and the speculative companies like the ones involved in nuclear power or quantum computing or rare earth minerals or some Bitcoin play that may or may not be a real business. Lots of people are repulsed by this market because they see it as being dominated by Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, Tesla, the Big Seven. I totally get that. Those stocks do make up about 35% of the entire S&P 500. When people see that level of concentration, they often think that, therefore, the market must be really dangerous. Others are repulsed by out-of-control speculation. When they see a market led endlessly by some uranium company with no earnings or a quantum computing play, Rigetti, that's struggling to make money for debt. Well, I mean, come on. That's not the market for them. I don't blame anyone who hates this kind of dual action. If there were really just two kinds of companies out there, then I, too, would be incredibly nervous. If, for example, OpenAI, a privately held company that's trying to dominate AI, somehow can't raise all the money it needs to build out a massive number of data centers, it could take the whole AI edifice, as the Wall Street Journal made clear, but I hope it's not a prescient article, down for the count. But what if there's another economy? What if there's a real economy? One that's trying so hard to beat a slowdown that seems to be engulfing so many sectors. If we can get some signs of life from the real economy, then I think money will flood into these stocks like it did today. And that would keep the bulls far from the slaughterhouse. And the bears would become endangered. Now, we got earnings from the big financials last week, and I was quite heartened by what they had to say. Wells Fargo put up extraordinary numbers, indicating credit quality is very strong. Bank of America showed us that the consumer spending and saving at terrific rates. We saw an extraordinary set of savings numbers from BlackRock and Morgan Stanley. Oh, what a quarter the Venerable Bank had. I like the Goldman Sachs quarter because they're starting to see a lot of good stuff from IPO and M&A advisory fees, although I feel like a lonely alum backing that one. Best of all, as I talked about last night, American Express reported a monster quarter that showed robust spending among younger people, very solid credit metrics. Wow. You know what? Okay, so the regional banks are not as strong. They need interest rates to come down if they want to do more business. It's true that JP Morgan CEO Jamie Dimon had to deal with what might be a fraudulent bad credit. His analysis is that if there's one cockroach, there'll be others. But aside from two other large bad loans, I saw fewer cockroaches this quarter than I can recall. Maybe the analogy's bad. More on that later. I don't want to freak people out about credit quality when we've had so few examples of bad loans. But it is perfectly reasonable to wonder whether the banks are doing better because we have a new president who's extremely pro-growth, with new bank examiners who allow more loans and easier credit. The Trump administration doesn't seem to want to regulate the banks. And regardless of how you feel about that policy, it's certainly good for the bank stocks. Today changed everything. We got some incredible earnings from really fantastic companies all over the map. And I want to recount some of them so you know I'm not just cherry picking. The best quarter today came from RTX. Yeah, the old Raytheon United Technologies. Defense contractor and commercial aircraft engine maker that's putting up staggering numbers. Why? RTX makes the complex military systems that are needed to defend our country and defend the countries of NATO. With the former getting special attention from the president, and the latter seeing more spending by its members away from the U.S. because of President Trump, it's perfect time for RTX. These guys are working overtime to replenish our missiles because we send so many of our stockpile to Ukraine. Management points out that while drones are important, you need a more comprehensive missile system as a deterrent to save a country. And you may need a golden dome at home to shoot down everything incoming. That's RTX. That's how stock rallies $12, 7%. The quarter from 3M, it was superb. This company used to be a fan of new products. Then got bogged down by all kinds of litigation related to forever chemicals that wreck groundwater. Now 3M is back to innovating. 70 new products launched in the third quarter, 196 year to date. The electronics and safety end market, after putting up slow growth for ages, both better than expected. As CEO Bill Brown in his tour de force quarter said, our third quarter performance gives us confidence we're on the right track and reflects the culture of excellence we're building inside the company as we continue to drive the rigor and up-tempo necessary to deliver on our strategic priorities. End quote. Okay, that may sound like authentic Wall Street gibberish, but it isn't for those who know how low 3M had fallen. It's all you need to know is why 3M rallied $11.86, 7.66% today. Not to be outdone, GE Aerospace put up incredible numbers for commercial jet engines and, more important, aircraft service. That's where the real money is. The robust airline industry involves an incredible amount of maintenance, and GE Aerospace takes care of it. I was blown away by how CEO Larry Culp could put up yet another stellar quarter. You know what, though? After talking with him, I think there's more stellar quarters to come. Mary Barra's General Motors delivered a terrific quarter. Strong demand for trucks that are exceptionally profitable. The auto business may be benefiting from the president's laissez-faire attitude toward carbon emission. There's the president again, helping business. The electric vehicles, okay, not helping the skies, I get it. The electric vehicles don't make as much money as the internal combustion hybrids. That's the strength of GM. And I know that when you have a president that's not all in on EV, they are going to pull back because EVs lose them a lot of money. When you get strength in GM, that has tremendous pin action, which is how Nucor, the giant steelmaker, could rally nearly 3% today. Again, very impressive. Then there's Danaher, DHR, the life sciences and diagnostic equipment company, which has been a huge disappointment for my charitable trust for so long. Not today, though. Today, Danaher gave us the quarter we've been looking for with a promise that next year could be even stronger, and that's why the stock shot up nearly 6% today. Finally, is Coca-Cola. CEO James Quincey showed remarkable execution, bringing out even larger profits by taking share and offering new products that are selling quite well. So even though the real economy may be slowing down, these execs aren't letting that slowdown get in the way of good numbers. All day today, I heard people wondering if the strength of the market's real. I think that's a fair question to ask when we've got a rally that's being led just by the Magnificent Seven. But the bottom line, today we had a rally led by the many companies in the real economy that just put up excellent numbers. When RTX and GE Aerospace and 3M and General Motors and Coca-Cola and Danaher are all delivering strong results, you know something's going right. Not for the data center or the high-risk speculative stocks, but for the actual economy. House of pleasure. Jay in Connecticut. Jay.
Hey, hi, Jim. I want you to know that anytime I see your show, you're always like a breath of fresh air. You're really interested in people, so thank you for that. Thank you.
Oh, thank you, Jay. I appreciate that. I'm trying to do it a little different. Thank you very much. How can I help?
Yeah, true. Okay, I'll go real fast. I think it was last April, I got scared because what was going on in the White House and tariffs. So right. I sold my my Netflix and my Eli Lilly. I'm only going to talk to you about one thing. You said I could still buy the Netflix back, but I'm calling today about the Eli Lilly.
Yeah, well, Lilly, here's the problem with Lilly. They need to have something else to come out. They need something that's big that the insurance companies will cover for their drug. Because right now, a lot of people just feel, you know what? This Ozempic thing, it's played out. If you get something else, a new indication, that will ignite the stock. Mark in New Jersey. Mark.
Hello.
Mark.
Yeah, is that you, Jim?
Yeah, it's Jim. What's going on?
Hey, I've been dying to tell you that I'm a big, big fan and admire your enthusiasm and your search for the truth and for the straight and narrow, and going back to all the way back to the Cutler Cramer days. So
man,
been around for you for a long time.
Yeah, Lara's my partner for a very long time. Well, how can I help?
Well, I've been thinking about I'm an investor, and I'm thinking about this stock called Micron, and I was wondering what your thoughts were.
Okay, I like Micron, but it just had a parabolic move, and we can't buy parabolics. We have to wait for it to come back down. I think it's not that expensive because the numbers for DRAMs are coming up. But I do believe that you have to let that one have a little bit of break before you jump in there. And thank you for the really kind words. Okay, look, when you have companies like RTX, 3M, and Danner delivering strong results from all different sectors, you know something's going right for the real economy. And that's what we need to see for the stock market. Oh, man, tonight, Viking Holdings just attempted 2 more ships, hitting 100 ships in its fleet. I'm sitting down with the CEO to hear more about what the company has in the pipeline as Wall Street begins to fear a slowdown in the travel space that I don't see. Then credit concerns have entered the chat. So should investors be concerned that the other shoe is about to drop, or could these headlines be one-offs? I'm digging into the situation. And my CNBC colleague Andrew Ross Sorkin drops by. He's got a new book covering the stock market crash of 1929 and all of its ramifications. I'm hearing all that he learned while writing this fabulous book with the man himself. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.